Good morning and welcome to Taxes Made Easy. Thank you for watching, either live or on rebroadcast. It is Friday, so gonna have a little bit more fun today. We're gonna focus on tax liens. Isn't that exciting? It's something that people ask questions about all the time. And again, people's biggest asset is usually their home. And the question is, how does the IRS treat real property, your home or other property that you might own? And then how do tax liens affect and really damage your ability to buy and sell property? So we're gonna dive into this. And we get these questions all the time. Can I buy property? Can I sell property? Um, and give us a call when you can, and we'll move. We're gonna be diving into this in detail through today. So again, hold tight, and we'll get this taken care of.
Your call has been.
Welcome back, everybody, and got a lot of news to cover today, and we're just going to dive right into it. First article. This is Big Lots, which is pretty familiar. It's all across the country. kind of a retail store uh, with a lot of, some furniture, kind of different household items. A lot of, I think it's a discount store as well. Yeah, discount chain, Big Lots. And I've known people that work for Big Lots for many years. Um, but they're shutting down hundreds of outlets, 315, up to 315 stores. So this is not good. This is going to put a lot of people out of work. Um, and so this is an agreement with the SEC here about closing down all these stores. Um, and again, going through different issues because their financial struggles. So they had close to 1,400 stores across the United States. Closing 300 is almost a quarter of all their stores, 22%. And they've been reducing it last year from 1,425 outlets. So again, they had net losses the last 3 years, 22, 23, and so far in 2024, and have been using up their cash assets. So I think as the economy continues to struggle, we're going to see more and more restructuring with big losses in many areas. Again, they're citing a continued pullback in consumer spending because people are struggling. So high ticket discretionary items, those are the number one things people aren't going to buy when money is tight. When people are concerned about the future, they're going to save. And so again, you have the store closures being the biggest sign of this struggling. And then other stores, Stop and Shop is closing 32 outlets. Cons, as we announced before, is closing all 553 retail stores nationwide and filed for bankruptcy. So overall, businesses are struggling and experience liquidity issues, so cash issues, especially with high interest rates that have made normal loans that they rely on for their business unaffordable or too expensive. Right now, the Fed rate has remained unchanged. With what happened, with the market crash this on Monday, with the softening of the labor market, I would be surprised if they don't. I've been very bearish about the Fed actually changing their rates, but I think enough has happened where come September, when they have their meeting, the beginning of September, I would be very surprised if they don't change their rates. It's a catch-22. If they change the rates and inflation is still high, inflation is going to shoot even higher and create more of a bigger problem. Again, they only have this small little lever to try to control things, and real inflation is much higher than what they're claiming it is. And the elephant in the room is government spending. Massive government spending, which, again, neither party is talking about. So, in June, they talked about a potential hike in interest rates if inflation were to remain too high. But then, on the latest trends, they're very likely to cut the rates. So again, we'll see what happens. It's pretty crazy. The ups and downs of the market. Expect to see more closures, more bankruptcies as businesses adjust to the changing reality. So the next article, this is actually flipping the script here from Breitbart. We have a glimmer of positive news that wholesale inventories rose in June. Went up. Soothing recession worries. I don't think they are soothed. I think this one piece of good news it's a positive. But you have a growth of inventories for cars and trucks, which will actually help reduce some of the same price increases that we've had for newer cars and trucks. And it means that we're actually producing. So it climbed 0.2%. And so that's essentially what economists had forecasted, what the government wanted. So again, that glimmer of good news. And compared to last year, they're up 0.1%. So small inches in the right direction. But again, it's just one piece of the puzzle. Moving on, and when we talk about tax, people going to jail over taxes, it happens. It happens, and so here we have a article from the New York Times. If this is interesting, you have they said 75-year-old tax scammer. So when they say this in the headline, it makes it sound like he was out scamming other people. And while he did scam his own employees, he wasn't out there trying to defraud other people. When you think of tax scams, that's what I thought of. That's what most people think of, is that they're out trying to scam the general population. What he did is bad enough, don't get me wrong. But again, he's going to prison for at least 9 months. And really the point of the article is that the jail in Brooklyn really has a lot of issues, have a lot of problems. It's overcrowded, understaffed, and people have been beat up, killed. They've had a couple of people murdered lately in the jail. So they're telling this 75-year-old man he's not a physical threat to other people. He's frail. Apparently he just came down with cancer. So it's a very sympathetic case to say, look, we're not going to put him in prison because the prison's too bad. We're going to put him on house arrest. So a house arrest doesn't sound too bad, but the thing is, he still has to pay the taxes back. He has additional penalties and fees for criminal prosecution loaded on there. He had to pay to defend himself in a criminal prosecution. Apparently, the judge, or his attorney, was good enough to get him house arrest in only 9 months. Based on, so the article focuses mostly on the problems with the NBC, but I did want to highlight that there are people that do go to prison for tax fraud. And the question is, what did he do that ticked the IRS off enough to put him in jail? And so again, he owed taxes worth nearly $1 million, and I help people all the time that owe $1 million or more. So what's the difference between this guy that goes to prison and someone that has a huge debt but isn't going to prison? So again, this paragraph really gets into it. So he owned a company that collected debts on behalf of medical facilities. So he was a debt collection company. He had misappropriated, so he stole the tax withholdings from his employees' paychecks. That is a huge no-no. So this is a great way to tick off the IRS, to upset a lot of people there. And it does happen where people can't pay the payroll taxes. Businesses just get in a tough time. But if you are not forthright about it, if you don't come out and deal with it, it can get nasty. So not only did he withheld the money from his employees' paychecks, he didn't make the matching contributions. Basically, he didn't pay his payroll taxes. He lied to his employees, workers, about it. And by misappropriating that, making it sound like he went and blew all the money. But here's the worst part. He lied about it and delayed making restitution payments. So when the IRS came after him, he played around with the IRS. He didn't deal with it seriously. So apparently he had substantial assets and he refused to pay. So if you have the assets, if you have the money to pay what you should have been paying in payroll taxes, don't play with the IRS. This is what can happen. This is what I warn people about, is that when you legitimately owe the IRS, there's plenty of ways that you can work with the IRS, buy time with the IRS, but you have to be upfront about it. Once you start lying, once you and when once you um, start trying to hide assets, especially with payroll liabilities. And I love how they label this. They try to say, well, they did this, they did this. Um, this is something that I see on a regular basis. People fall behind; they can't afford to make payroll taxes. It and then normally they're not telling their employees about it because it's shameful that they're trying to catch up and get these paid. Um, but apparently, this was an egregious enough case where he blew off the IRS. He had assets and didn't want to pay out of pocket for how he had hurt his employees. And the IRS treats that as you're stealing from your employees. In a sense, you are. To the average business owner, it feels like just another tax because it is. So, so again, there were plenty of there are some mitigating factors. So his advanced age, a recent cancer diagnosis, which is why they decided 9 months of home arrest made more sense than putting him in prison. Again, he would be very vulnerable, and that prison that has had a lot of problems. So again, really wanted to highlight this article for what it mentions and highlights about. Again, this is payroll liability. This is something we see on a regular basis. Whether or not someone goes to jail is how do you deal with it. So we're going to continue on a couple other tax issues and then dive into tax liens, the main issue for the day. But right now we have to take a short break and we'll be right back. Welcome back, everybody. Again, just continuing the conversation here at Taxes Made Easy. I'm going to jump to the next article here. And this is actually an interesting article, kind of a preview of what we might be facing here in the US. So, again, this is focuses on China. And China has its own issues and plenty of them. So again, when people talk about China, um, the central government controls way too much, and they tend to take almost all of the tax money, leaving local collectors and the local companies starving for cash. And they're the ones that do most of the infrastructure. They pay the salaries for the local employees. So again, you have Chinese authorities going after companies and individuals for debt dating back decades. Why? Because the government is in need of money. They moves to plug massive debt shortfalls and address a mounting debt crisis. So again, you have more than a dozen Chinese companies saying they were slapped with millions of dollars in back taxes. Why? To fix local finances. So again, this is a situation where the government is reacting rather than being consistent. And it's really hurting companies. And again, we're talking about huge tax bills here. So local government, they're told debt is estimated at 11 trillion. Many of these are off balance sheet because, of course, in China they don't play by the rules. They play games. But again, that's one a huge risk in facing the Chinese financial system and economy. So the Communist Party has pledged to improve the tax regime and better balance control of the government revenues, and they promised that before. So again, it's one of those things that they've made these promises and haven't followed through on them. So just a few of the examples. One company was hit by a $12 million tax bill for taxes going back 30 years ago. And then another company got two bills totaling $92 million. So a mining company going back 20 years. So when you get hit with something, the government decides, oh, well, we're going to go back and collect. It is devastating to companies. And the question is, why do we care what's happening in China? Because we're seeing the same thing here in the United States. When governments have been squeezed for cash, they don't have enough to cover their bills. Sound familiar? They go after businesses. So again, economists are saying it's unsustainable in the long run. China must beef up its tax collection. But it's not just about beefing up tax collection, because that's what we're doing right now. Beefing up tax collection thanks to the Inflation Reduction Act and the Biden administration. The problem is when you beef up tax collection and you go after people for really old debt, then right here, sudden new tax bills have hit some businesses hard, further damaging already shaky business confidence. Sound familiar? So here's a company that suspended most of its production after the local taxpayer demanded $69 million in back taxes. And they're laying off staff and cutting pay to cope because it's not money they have in their pocket. And the arbitrary way taxes are collected with periods of leniency followed by sudden crackdowns is counterproductive, making it harder to invest, harder to plan. Why would you, again, this is injecting uncertainty into the market at a time the Chinese economy is struggling. There are a lot of issues going on with this Chinese economy. So companies and individuals, anybody making money, really it's really is affecting businesses in China. And the ironic thing is this is what's happening here too. So I'm going to just stop sharing for a sec just to talk about that. People don't understand how aggressive, and how would they unless they're in the trenches dealing with this, how aggressive the IRS has gotten in the last 3-4 years under the Biden administration. Didn't happen like this under Obama, Bush, Trump. They're all pretty much static, where the rules hadn't changed that much. Things were fairly consistent. Now they're auditing everybody. You're talking retirees, you're talking middle class, you're talking people, lower income people. And again, we have videos where they've admitted this has always been low-hanging fruit for the IRS to go ahead and audit and disallow claims. And I can have examples with grandmothers raising grandchildren, that are retired and working as hotel cleaners. And the IRS still is going after them and fighting to make it harder than ever for them to get the tax credits they deserve, they qualified for. And so and the going after businesses has really been ramped up under the Biden administration. People are suffering, people are hurting, and while they can't go back 20 or 30 years, they're going back as far as they can on audits. People are getting hit with a lot of fees that they're getting blindsided with. And that's all trying to collect as much as they can in revenue because we're overspending by $2 trillion. So it doesn't matter how much the IRS squeezes the American public. What they're getting, I think they're planning on getting $80 billion after spending $8 billion in expanded IRS. They are squeezing people, hurting businesses, shutting down businesses as a result of this, and causing a lot of pain and uncertainty in the economy because people don't know what's happening and how aggressive the IRS is going to come after them. So, again, this is why I want to talk about China, what's happening there, because, again, our press might not talk about it. But the same thing is happening here in the United States. Not to the same extreme, where business states are going back 20, sometimes 30 years. So if you're dealing with state taxes, as they're feeling the pinch, especially in California, New York, I've definitely seen them become more aggressive and go after more people as well. So again, that's a problem with the government. It's a financial crunch. Easy solution is to go after the taxpayers more and squeeze them rather than be responsible and get their own financial house in order. Going to jump to another article here, and this one is a different take on things. I do think it's important to share. This is from USA Today, and this really goes after President Trump about immigrants. And this article, pretty one-sided. They come out and they emphatically declare they pay their share of taxes. So they're saying it's misinformation, which, again, governments speak for things they don't agree with, that they don't pay taxes, that they drain public resources. So I think it's an open question whether or not what they contribute is more than what is taken as far as government resources. But again, it's not that we don't want immigrants. And I think people need, one of my associate attorneys is from Mexico. Great. He's amazing. He came over legally, went to law school. And he's very, very frustrated by what he sees on both sides of the border. Real people getting hurt. But going back to this article, and this is a common argument among the left, that they want more immigration, legal and illegal. So again, this is an open secret among many on the left, is that they want more illegal immigration, and we have higher illegal immigration than ever right now. So the question is, I love this, is actually kind of funny. If you aren't already mad after reading the preceding sentence, hold my beer. So let's get into this. I welcome the challenge. I welcome different perspectives because we should have open minds when looking at things. They too come, immigrants, most of them come to boost our economy. Well, to boost their personal families, help their families out. And again, I'm fluent in Spanish. I've worked with large numbers of Latinos here in the United States, and I feel for them. So I guess in a way I'm sympathetic to this. Personally, I do think we need to strengthen our immigration laws and control our border. But to claim that they don't contribute anything to the economy is a misnomer. There are a lot of benefits given out. So whether or not it's a net positive or not, I think is an open question. But people come here, they work. They a lot of them are working, either through a false social security number if they have a W-2 job, if they're working in factories and stuff like that. That's what they have to do. And the problem is that it creates all kinds of issues, identity theft, that can take years and years to unravel, especially if it's an ongoing issue. So this whole idea that people come here illegally and work illegally outside our system really hurts a lot of people. And that's one thing this doesn't talk about. And who can get hurt the most? The illegal immigrant, too. If they get their taxes, if they get levied or have their, or get hit with garnishments or get hit with tax liens, I can't help them because they're working outside the system. Can't straighten them. So what they usually do is they drop that false social security number. They have to quit that job, go somewhere else, and start working under another social security number. So again, people can't establish themselves. They can't plan for their future when they're working outside the system. So you are not helping people. I do think, again, if we had the border controlled, and that's my big caveat there. Personally, I think we do need to have some pathway to citizenship. Maybe it's they return to Mexico. Maybe they follow the laws. But I think we do need to make it more available for more immigrants to come in legally. But there's so much opposition to that because we've been sold that bill of goods time and time again. And right now, the border's wide open. The laws that we do have on the books are being completely ignored. So it's hard to say, let's make more people legal or make it, allow more people to come in legally when people are just flooding in illegally. So they do pay a lot of taxes. She claims around $100 billion in 2022. I don't know where she's getting that number from. So again, this is Institutes on Taxation and Economic Policy. Again, not a very balanced source. But again, there's a lot of information. So I don't want to focus on the political side of this. I do want to focus more on, again, she cites that same institute again, that they paid $4.9 billion in state and local taxes, but does not mention what kind of services were used. So again, I think it's worth the discussion. And do our immigration laws need to be fixed? Absolutely. Is the political will to do it right out there? Absolutely not. And even a lot of the immigration bills that have been suggested are just bandages on the situation. They let more and more people out of the country without helping them actually live and work under the laws of our country. So again, being a tax attorney, it's sad. I've seen plenty of people that I couldn't help because of the way our immigration is set up in a very haphazard manner. And in the end, it just hurts people. So going to jump to the IRS real quick. This is the Employee Retention Credit. They came out with some new news, some new facts. So the IRS is processing more returns than ever for the Employee Retention Credit program. But they're also disallowing quite a few. So the IRS, they got overwhelmed. They put a moratorium so they could digitize all the applications. And now they're using this digital program to look at the high-risk ones and then the low-risk ones and kind of separate them out. So they sent out 28,000 disallowance letters to businesses who claims show a high risk of being incorrect. Doesn't mean they're right. some computer program looked at it and say, hey, these are most likely, have enough flags. We're just going to disallow all of these. So if you get one of these disallowance letters, somebody didn't actually look at it. This is from a computer program. And they're saying they'll save up to $5 billion in proper payments, but they don't know for sure if they're improper. So thousands of audits are underway. 460 criminal cases have been initiated. Truth here, this is since the beginning, but they are stepping this up. Here's some good news. They are moving forward to pay 50,000 low-risk claims. So they say valid, but really it is low risk if you get deeper into the article. They are still talking about opening up the voluntary disclosure program again. So people, they will be reopening that up so people can voluntarily report and even if you have been paid. But again, if you are in that ERC program, sit down, go through it with a CPA, with a fine-tooth comb, check it out quarter by quarter, and if you believe you still qualify, stay in the program. But understand where the IRS is going. And again, we threw out all kinds of money in COVID. Now they're going back and scrutinizing this very, very tightly and going after businesses that either didn't qualify or their computer programs, it's likely they didn't. So again, this is the whole inconsistency of the government thing where it goes back and forth. Last article here, and this is actually on our topic for the day, talking about tax liens. You know what? I'm actually not. It's not exactly on tax liens. So what are tax liens? So when you owe taxes to the government and you set up some kind of resolution, it'd be an installment agreement, a payment plan. If you're doing an offer in compromise, you're not filing a tax lien because you're settling the debt. But anytime the government thinks that you need more time, they can go on and file a tax lien to preserve their interests and make sure that you can't go and sell property and, hey, I didn't disclose this. I got to deal with the IRS and now I'm going to run off like a bandit after selling property. It's the IRS's way to make sure that you're telling the truth. Now, in 2017, the IRS changed some of the rules where the credit agencies do not report. It doesn't show up or it's not supposed to show up on your credit report anymore if you have a tax lien. Can people still find it? Yes. When you apply for purchasing a home, it does show up if you have tax liens filed against you. And if you have IRS debt, that typically needs to be addressed before you can purchase a home. And we're going to dive into purchasing a home after this next break. But a tax lien really is a notice filed with your local county recorder. And it's a notice out to the public that there's a lien on property. There's a lien, if you go to buy or sell property, or in particular any property connected to your name, the tax lien needs to be addressed before it can sell. So a lot of mortgage brokers, they go hands off. If there's a tax lien, they don't want to sell the home. They don't want to deal with people that have tax liens. It's seen as a credit risk. And so a lot of people are left out in the dark. We're going to talk about how you can buy and sell property even though you have a tax lien and move forward with your family and for your own personal finances. And we'll do that right after this break coming up in about 5 seconds. But again, a lot of information. We're just skimming the surface here, and we'll be right back. Welcome back, everybody. Taxes Made Easy. I'm just going to dive right back to where we were with tax liens. So again, a tax lien is official notice out to the public that your case has had a formal notice posted against you. Again, filed with the local county recorder's office and attaches to any real property that you might have. So homes, vacant land, condos, anything with a title to it that's registered in that county. It is public information, even though it doesn't go on it's not supposed to go on your credit report since 2017, and people can research it and pull up that information. They often do. So when you're doing credit checks, it is very common for it to still pop up, but it's not shown on your credit like it used to be. It's not supposed to. Now, when will the IRS file a tax lien? They can pretty much any time that you owe taxes. So I get people and say, hey, I need to make sure a tax lien isn't filed. I'm like, well, we need to set up a resolution and quick, and set up the right resolution. Because if you go in and you tell the IRS, hey, I can't pay, they're going to go in and file a tax lien. If you go in and tell the IRS, hey, I can pay, but I can only pay so much. If you can't pay the balance in full, they'll file a tax lien. If it's over $25,000, they'll file a tax lien. Up to 50, they used to be more flexible, where they wouldn't sit there and file tax liens every single time. But now they've gotten very tax lien happy. Again, part of the changes in the last few years, where even if you owe below $50,000, unless you do it in a specific way with a direct debit installment agreement, to avoid the tax lien, they're going to file a tax lien anytime you set up a resolution. So it's become kind of an inevitable thing. There is a way to appeal a notice of filing of a federal tax lien, and there's a way to try to get it removed. It is not as easy as you would think. Again, this is the IRS being hard to work with. I've had plenty of cases where it did affect people's businesses. It affected their ability to get continuing loans, to contract out. Even if it had a direct impact and they were going to lose their job, I've seen times where the IRS has refused to release a tax lien unless they paid it down below $25,000. They were on a direct debit installment agreement, and they were able to show 3 months of payments. So that's the only change lately that has benefited taxpayers, is that if you get on an installment agreement, it has to be a direct debit installment agreement. Right now, the IRS is insisting that it be below $25,000. The balance needs to be below $25,000, and then you can apply for and get that tax lien removed. If you default or something happens to that, they're going to expect them to slap that tax lien right back on there. It's not a go-to for the IRS, so that's not the first thing they do when they're looking at a case. But if you have older debt, it's very possible that tax liens are on there. So how do you get rid of a tax lien? Well, the easiest way is pay off the debt. That's the easiest way. You pay it off. The lien should be self-releasing. And if it doesn't release, they have a tax unit that you can contact and communicate with, and they have forms that you can say, hey, this should have been released, it wasn't, you can submit it. And this is one of the units that actually functions still fairly well at the IRS. Most of the IRS units are not functioning very well. They're overwhelmed, understaffed, etc., because almost all of the funds are going to collections, not customer service. Why does a tax unit still function fairly well? Because the IRS gets less money if it doesn't function well. People need to buy and sell property. People need to get tax liens removed so they can still function. And the IRS wants people, here's the big trick. The IRS wants people to buy and sell property with tax liens. So if you feel like a tax lien is stopping you, there are ways around it. And if you know what you're doing, or if you have a tax professional that knows what he's doing, you can buy and sell property, and the IRS actually encourages it. Why? Because when property is bought and sold, when those transactions happen, that's when the IRS gets paid. So, example one, you have a house, you need to sell it. There's a tax lien on it. It's one of the easiest things to do. You call the tax lien unit, you get a payoff balance 30 days out, and you give that to your title company, and they will use that to process it. And so they will just take that cut from the sale of the house. So let's say you owe $100,000, the house is worth $400,000, and you have a $200,000 mortgage. So good question here. the mortgage will always get paid first. It's called a purchase money security interest. So whatever was used to purchase the property gets paid first. What if you have a HELOC? Or a second on a home? So if that was put on your home before the tax lien, it has priority, and those will get paid off on the sale of the home before the IRS. So let's change the facts a little bit. Let's say you own a home that's $400,000 that you need to sell. You owe $350,000 on it on the first mortgage, and you still owe the IRS $100,000. The mortgage will get paid first, and then what's left over will cover the commissions, the sales and all that. But the profit left over, instead of going to you, will go to the IRS. So the tax lien won't be paid in full, but the IRS will say thank you for the chunk of change, and then they'll follow up on the rest of it. So again, it's they absolutely are happy to help with the sale of homes, especially the sale of homes. So what if you're trying to refinance a property? Again, not a lot of people are refinancing because rates are high, but who knows? It's very possible in the short term, with the way the economy is going, that the Fed will cut rates. If the Fed starts cutting rates due to a softening economy, a lot of people want to refinance. Can you refinance with tax liens? Yes. You have to do what's called a lien subordination or subrogation. It's fancy words, but you put in there and you're telling the IRS, hey, I'm not messing with your lien. I'm just switching my lenders out and refinancing to get a better interest rate. And the IRS will do that because they know it makes it more likely that you can pay them. So it's just another form. It takes a while to process. If you do owe these issues, here's a key thing: get in there and work on these beforehand. Don't wait. So when you get in there, you can switch out your lender, even though the new lender doesn't have priority. The IRS will switch that out to refinance, especially if you're taking some money out and paying them. But again, that's usually not a problem, but you have to get in there. Don't expect it to happen right away. It's going to take some months to get that done, but it can be done and allow you to refinance your property or take out a second, especially if part of that is going to the IRS to pay them. They're more than happy to help you pay them. What about purchasing homes? So a lot of people think that they can't purchase homes. They have tax debt. Sometimes liens have been filed. One of the things about most home purchases is that you have to go in and file your last 3 years of tax returns. They want to see that. They want to know that you're up on your taxes, that you don't have any problems. I have heard rumors lately, and actually talked to some mortgage brokers that are actually going around that, which really helps people with tax issues. But again, they're dealing with separate lenders. You're probably going to end up paying higher rates if you're going around that because they're taking more of a risk. But if you're following the normal pattern, you're filing your last 3 years of returns and you owe balances. There's a lot of mortgage companies out there that if you owe the IRS, they won't touch you. Pay your taxes first, then come talk to us. But there are companies, and we do know and refer to these companies, where if you want to get out of the rental market, I mean, right now it's very expensive to purchase a home, but if rates go down, I think a lot more people will be trying to purchase a home. You need to resolve your taxes. And if you are hoping to purchase a home in the next 6 months to a year, it's the perfect time to go resolve your taxes. Get that taken care of so that when you go to negotiate, if you have either, you can do an offer and compromise to wipe out the debt, or an installment agreement to set up a payment plan. And even with the tax lien, once you set up a payment plan, there are plenty of mortgage companies and title companies that will work with you once you have a payment plan in place. So that's the kicker, is that you have to set up this resolution. That you typically want to see 2 to 3 months of payments on that before they just say, okay, you set something up and you're good to go. They're going to want to see that you're consistent on that before they say, okay, we're not going to consider the taxes here. So it is important to get ahead of it, address your IRS issues head on, and be consistent on those payments. Once you have those, usually 2 to 3 payments, it's usually not a problem if you're working with the right mortgage companies. Again, there's plenty that won't take taxes, but just because you get told no, just because someone said no, doesn't mean that's the final answer. Call around. We can refer you to mortgage companies or mortgage brokers that will handle balance cases that have tax liens or tax debts. So again, key is get ahead of it, give yourself plenty of time. Don't be ready to close in 30 days and then call us and say, hey, can you set this up for me? No, we need more time than that. So again, if you are considering buying a home though, and you do have tax issues, perfect time to call, get some information and get that figured out. And here's a caveat. Once you set up that installment agreement, and once you pay them, long term, if you can't afford to pay them, you can always renegotiate with the IRS. The IRS doesn't like it, and in general, just defaulting on installment agreements because you don't want to pay is a bad idea. If your finances show that you should pay it and that you can pay it, you should pay it. But if there are times that we've set up an installment agreement, got someone into a home, and then did an offer on compromise that they qualified for, or with the additional cost of the home, maybe they don't, by the IRS numbers, they don't qualify anymore for an installment agreement. They qualify for a hardship plan. So you can go in and renegotiate. Just be aware, if you're doing a hardship plan or you're doing a lower installment agreement, it is possible the IRS will file a tax lien on your new home. So again, for a lot of people that retire, that's something they don't want because they're getting older. One of the things to consider, especially with older debt, when the underlying tax debt expires or goes away, the tax liens go away too. I've got a case I was just talking to him on the 6th. Yesterday on the 8th, about $5,600 expired, went away. And then in less than 2 months, another $5,500 is expiring and going away. The tax liens that go with them, they have tax liens filed, are going to expire as well. Once they expire, they become unenforceable. And if you sell your property the day after, I would give it a little bit more time just to be sure. But as long as that tax lien expires and you confirm that it's expired with the IRS, you can go sell that property for full value and you don't have to pay the IRS. Nobody's going to ask you to do that. You can always give them money voluntarily. They'll always take your money. But legally, you have no duty to do so once it expires, once it passes the CSED. So if you have questions about this, there's a lot more details, especially varies by case. Buying, selling, refinancing with tax debt and tax liens. And again, if you're in an industry or if your business could be hurt by tax lien filings, call us, because the sooner you get involved, the sooner that you deal with the issues, it's almost always easier to do it sooner rather than later and prevent the filing of tax. It's always easier to prevent the filing of a tax lien than to sit there and contest it after it's already been filed. After it's already been filed, in most cases, the best way is to deal with it is to resolve the case either through an offer or a payment plan. But if you owe too much, or if you have too much income or too many assets, it might not be a good resolution. So again, if you have any questions, we do have people we can refer you to. We can assist you with resolving the tax debt, but we do work with mortgage brokers, and we can find you connection for mortgage brokers across the country. Again, our phone number is 520-485-7371. Don't hesitate to call us, and we can review your options, help you get your tax returns prepared, help you get everything squared away, so that way you can deal with, buy, sell, and function in our economy. Despite owing the IRS, despite taxing, you can still do things. And most people don't understand the IRS actually wants you to be able to do that, because when you do those kinds of things, they're more likely to get paid. So our website again is guardiantaxlaw.com. All these YouTube videos are posted up there. If you do have questions, call us. Free consultation. We give free advice on a regular basis. And I hope everybody out there has a great weekend. Again, Friday, I get a little more loose and relaxed on Friday. But stay safe out there and protect your finances for you and your family so you can sleep easy and have peace of mind.